because the professional traders trade from 5 million to billions of dollars. They don't trade small positions or position sizes. They trade very huge positions. So let's put it on a very conservative approach. Let's say a retail trader is someone who trades less than $1 million in the financial market. So as a retail trader, if you're trading with $900,000, you're a retail trader, you're not a professional trader. The professionalism of a trader is when you're able to manage funds for the big guys. Like, let's say the Prince of Arab gives you some certain amount and tells you that he wants you to help him, you know, look after this money, trade this money, manage his money for him, that this money is just sitting in the bank, he's not getting any, interest of it. Now, this is where the whole concept of the forex trading comes to play. To be able to trade in the forex market, one, you must have something doing, you must have a job and all of that. You must have something that gives you money to fund, and then you cannot just become a retail trader and start trading people's money. You get in a lot of trouble. But that is that. You keep that aside. With more experience, you will learn all these things. So the retail trader growth. A retail trader is someone that trades in the financial market using technical analysis, fundamental approach, and all of the kind sentimental analysis and all of that. To grow as a retail trader, you need certain key values to grow as a retail trader. The growth phase of a retail trader is from the unconscious incompetence. Now you have the conscious incompetence phase, then you have the conscious competence and the unconscious competence phase. Now, in the unconscious incompetence, when you're just coming into the market, you don't know what you're doing, you're gambling, you're over trading, and all of that. So you don't have knowledge. Now, the conscious incompetence is where you now have knowledge of what you're doing to be wrong or what you have been doing to be wrong. Then you're trying to correct it. All right. Then you get a mentor and all of that. The conscious competence is when you become profitable, you have a system, you have an edge in the market, you're disciplined, you're having good risk management and all of that. You become conscious of you become conscious of your competence to trade the global financial market. Now, to get to the professional level, this is a hierarchy thing. So from the bottom, we have the unconscious incompetent trader. Then we have the going up, we have the conscious incompetence trader. Then we have the conscious competent trader. Then we have the unconscious competence trader, or rather competent trader. So that is where you get the investment bankers, you get the hedge funds, you get the pension funds. These are the big guys handling billions of dollars, millions of dollars, and all of that. So, that is the phase you get to when you become unconsciously competent. The system you're using, you're unconsciously profitable, or rather, you're unconsciously competent. You do it effortlessly, that you don't make silly mistakes. You know the right things to do. You cut your positions, you cut your losses, and let your winners run, and all of that. So this is what you need to. These are the phases of the growth you have to go through to become a professional trader or to become a profitable retail trader. Now, the fifth is how to become a profitable trader. Now, there are certain things you should do to become a profitable trader. One, you should have a system, a rule-based system. You should have rules. You should have good risk management. You should have discipline. And you should have good emotional control. Emotional control is not talked about a lot in this space because I see a lot of traders. I won't call names, I won't explain any scenarios, but I'm just saying they feel this is a game. They feel it's a game of numbers. They're trying to outrun themselves. But when you realize certain things when it comes to trading, you'll be more aware and you see things for what they are. And that is why I'm bringing this, and I call it the soft to hard touch, because right now we're going into the hardest part where I get to show you how I do things, you know. So Let's just keep it cool. Let's just keep it steady. So these are the things you need. You need to build a system, and to build a system, you must try every other thing that you've been doing. You must try every other thing. If you're a retail trader looking to, learn forex or learn the financial market alone, which I don't advise, you have to meet a lot of different things, have a lot of bad habits. You have to, along the way, climbing up the growth phase, you'd be cutting those bad habits, getting new ones, getting good ones, and all of that. But the best way to learn in the financial market is to meet someone who has done it, been there, done it, and the person who has experience, years of experience, and all of that. And don't listen to all these other guys claiming to know what they're doing, showing you technicals, showing you this and that. No, they don't have the data to back it up. They don't. That is just the truth about it. But find you someone who has been there. If the fees are high, look for someone who has the knowledge where you can get lower fees for quality knowledge. But they know what they're doing, right? They're in the phase of the conscious competence, but they are looking to scale to the unconscious incompetence. That's the growth phase you're looking to, be at. So they can charge you less, because if you're looking to trade or looking to learn trading, excuse me, looking to learn financial trading or trading the financial market from a professional trader, I promise you, you'll be paying nothing less than $1,000 per month. You can even pay. I think there are some guys at I'm trying to remember the place. Thailand, Phuket. There's a guy in Phuket, Thailand, amazing guy. I won't mention his name in this video, in this live stream, because it's some quality of a guy you should learn from. So this guy in Phuket, he has an academy. He brings a lot of retail traders into the space. He's an institutional trader, ex trader of the JP Morgan, and I think that's the JP Morgan. He traded with them from 1990 to 2000s, and then he left them, I think, in 205, 206, and then he created his own academy and all of that. He has earned a lot of, millions in bonuses trading as a professional trader, and now he decides to let these new guys come in and get some, good stuff. I love this guy. I love this. He's the best I've seen. He's the best I've seen. I have another guy, FTMO prodigy, Bird, but I just called his name, but all of that. These are amazing guys. Amazing guys. Ben is a professional prop trader. He's a professional trader because he manages money for the big guys as well. So that is that. So I think we've gone through all of that, and you just have to learn, put in the work. Don't give yourself a time to get there. But I'll give you one advice: if you want to make it in the forex market, fail and fail fast enough to get to the top. That's a quote from Dapo Willis, a retail trader, lives in Dubai, Nigerian, and all of that. Just borrowed his quote. So let's get to the sixth explanation: introduction to advanced technical analysis. My next line of action for GBP, JPY, and Euro JPY. So that is that. Let's hop on the charts and see what we're gonna do with GBP, JPY, and Euro JPY. Let's get on. Let's kick in. Let's kick in. Let's kick in. All right, let's go this GBP JPY. I just have 9 minutes to show you this. All right, so just stick with me, stick with me, stick with me, stick with me. No, not this time frame. Let's go to the 4 hour. So this is the trade on GBP JPY. I took this trade on Friday, I was risking 30 pips. I had to move my stop loss a bit higher because the volume was not good, and the trade was respecting everything I saw before hopping on the trade. So I decided to hold over the weekend because I use a broker that doesn't charge me for spread. So I've tried them out a couple of times, and weekend holds, they don't charge spread. So overall target, I'm looking for GPJPY to drop to the downside. Why do I have this bias? Because I was trying to long GPJPY, I think 3 weeks ago. It didn't happen, though I made a cool amount of money, 1:2, which eventually something happened, but all of that is all in the past now. We move on. So I'm expecting GPJPY to break below this guy. So this is the reason I hopped on this trade, right? And price has been respecting this high. It came here, broke down with a 1 hour candle, engulfing, gave the buyers came in, they closed above here. They didn't engulf this guy, but it's forming like a rising wedge, and it could drop. So this is my reason for holding. If price breaks above this high, I would love to exit and protect my equity, take the losses and smile. I will take the losses and smile, because that's all you have to do. You have to be bold enough to take the losses and smile, and you move on. Because one thing, once you realize there are always opportunities, and then you just have to have